Bitcoin has a category defining winner already in MSTR. Furthermore, Bitcoin doesn't really interest me too much. On the Bitcoin blockchain, there is one asset, a Bitcoin, and there is one function, send. It's like a global abacus where I can send the bead to Rom on the abacus and Rom can send it back to me. Ethereum interests me because I believe Ethereum to be the next generation of the internet. And basically, we can digitize any type of asset. So a stock, a bond, a derivative, an electron on a solar panel, and then we can embed those assets into digital legal agreements called smart contracts. And we can say, if X were to occur, then send the asset, else failure. And so basically, I believe that Bitcoin has the TAM of digital gold, whereas Ether has the TAM of the next generation of the internet. And if you can put a price on the total addressable market of what commerce on the internet is, I believe it to be exponentially larger. Now, furthermore, if you really understand the digital asset treasury space, it's important to understand how MicroStrategy got to where it was. And basically, the benefit of having a public vehicle versus my commodity pool operator, commodity trading advisor, when I had SMAs, for example, separately managed accounts, is in the public vehicle, we're able to use the public capital markets and we can issue equity or we can issue debt, simply put. And MicroStrategy didn't get from single digit billions to a $1 vehicle by issuing equity. And depending upon how you issue equity, that could even be dilutive to your shareholders. And what made MicroStrategy grow from single digit billions to centibillions is what is called a convertible bond. And to understand how these convertible bonds work, you're essentially selling volatility to a hedge fund that wants to acquire volatility. And then the proceeds of that sale via convertible bond is used for cash to acquire the digital asset for the shareholders that are looking for exposure to the underlying specific digital asset. In MicroStrategy's case, that was Bitcoin. The good news is that with Ether, it is double the volatility of Bitcoin. And unlike Bitcoin that doesn't generate yield, Ethereum can generate yield. So if there are coupons, like in a preferred share, we have a much better way to satisfy yield payments. So basically, it's double the ball with the ability to generate yield. So basically, this is a better asset for this type of public vehicle.